The prime lending rate at banks is now 0.25% higher at 7.5%. This after the Reserve Bank hiked interest rates yesterday, warning that higher food, fuel and energy prices will keep inflation at higher levels. The Reserve Bank adjusts rates to keep inflation in check.
Given the expected trajectory for headline inflation and upside risks, the committee believes a gradual rise in the repo rate will be sufficient to keep inflation expectations well anchored and moderate the future path of interest rates. However, economic and financial conditions are expected to remain more volatile for the foreseeable future. In this uncertain environment, policy decisions will continue to be data dependent and sensitive to the balance of risks to the outlook.
For those who have a bond, this means that for every 1 million rand you owe, you'll now be paying 152 rands extra. To discuss this further, we speak to the CEO of Leadhome, Marcel du Toit. Marcel, thank you so much for joining us. I've seen conflicting reports. Some reports saying, well, despite the increases, the property market is going to remain strong. Some people feel it's going to slow down. What's your take?
Strong. We've certainly seen a very buoyant market since COVID. The first lockdown ended in June 2020, with the market performing way above expectations. That is largely driven by the fact that interest rates have come down from 10% to now 7.5%. It was obviously 7% a couple of months ago. So there's still a 2.5% differential between where we were pre-COVID versus now. That, I think, creates a large opportunity for first-time buyers to get into the market. And I think, secondly, we shouldn't discredit the changes that's happened in the normal working style of people, with people working more remotely, spending more time at home, wanting fiber internet, wanting an extra room for study. So we don't think a 152 rand change on a 1 million rand home loan over a monthly period is going to have a massive impact on the volume of sales and the buoyancy of the market at the moment.
What's the rise in interest rates going to do for banks' appetite for lending?
Look, banks win. It's high interest rates. I think what we've seen from the banks that over the second half of last year, that we've seen a move towards more aggressive lending. There was a slight uptick in the percentage of loans that were issued at zero or below prime or less than prime. And I don't think that's going to change. Banks are quite aggressive. We've seen that they have understood and valued the asset that is a home, and they're willing to lend against that. So we don't think that there's going to be a massive change from the bank's appetite to lend. At the end of the day, they're going to end up writing more interest, which is good for them.
The interest rate hikes are set to continue for the next year or two, right, Marcel? Is there any concern that buyers haven't left room in their budget for those increases? And if they haven't, how does that affect the market later on down the line?
It absolutely is, and I would recommend that anybody who's looking to buy a property either budgets at a higher level of interest rates, so where you can budget now at 7.5% prime, rather do 8 or 8.5%, because that's certainly going to be coming in. I think that is a slight concern. However, you're also going to see capital growth during this period. Yes, South African property grows at somewhere between 4% and 6% per year in terms of capital growth. So those two should even each other out.
The interest rates, though, not the only thing we should be worrying about. The economy as a whole, the health of the economy is a concern. How is that going to have an impact?
Look, it absolutely is. However, it is difficult to see that the economy can be in a worse place than it has been for the last 2 years. And what we've seen during the course of the last 2 years is South Africans are highly, they can get through tough situations. And we think that from an economic perspective, that things won't get much worse, or we don't see anything getting much worse from a growth perspective. So there is significant upside that provides really nice upside for investors who are now investing in assets to capitalize in the future.
Marcel, do you have any good news for landlords? They've been hit hard over the last couple of years.
Unfortunately, I don't. The reality is that because of interest rates, more people, and especially a lot of tenants, have been able to afford the mortgage payments and qualify for mortgages. And so what happens is we've seen that a large number of really attractive tenants out there have decided to invest in their own property because it makes sense to invest in your own asset and build your own personal wealth. So the rental market is under significant pressure. It has been for the last 18 months. We don't see that dissipating until interest rates hit the 9% mark. So if you're a landlord, you are in for a tough ride. I'd highly recommend hold on to any tenant that is paying their monthly rate. Don't try and put through out of touch increases on an annual basis. And if you are in distress and you can't get a tenant, it's worth looking at selling the property. There are a lot of buyers out there, a lot of people qualifying for loans. It makes sense to do that if you are finding yourself in a difficult position.
All right. Marcel, thank you so much for your time. We appreciate it. The CEO of Leadhome, Marcel du Toit.